Good afternoon and welcome to Medellin and the weekly review for June the 19th from InterBolsa. It's been a shortened week, a 4-day week. It'll be a 4-day week again coming and a 4-day week after that as well. So it's been very quiet. Volumes have been down, not disastrously, but definitely a lower trading week. Biggest headline of the week was arguably the central bank, who today cut rates by 50 basis points to 4.5%. We're unprecedented levels right now, and frankly locals don't know what to do with that rate. We haven't been that low. The banks themselves haven't moved mortgage rates down, or loan rates particularly. So we'll have to see if the government pressurises them to push those changes through. The central bank, during its commentary, said they don't really expect to change rates again. They expect growth in the second half of the year, and we may even see reserve requirements cut during the probably during the fourth quarter now. As I say, the coal cap was fairly quiet. We were up 1.3%. We saw increased buying from foreigners. They were definitely net buyers. Funds too, locally are still buying, although obviously on limited volume. The peso went below 2,000, but then gave it up. It went back to 2,117. It dropped 5% on the week. Could well be driven by Zuluaga's comments on Tuesday, which we'll come to later, where he expects the peso to weaken off considerably during the rest of the year. The test market was very quiet indeed, not many end buyers or sellers for that matter. Speculators basically ruled the roost, closed at 9.38%, buyers above 9.5%, but effectively very, very quiet. In politics, Uribe's been talking on a variety of subjects. Free trade agreements, he expects Canada, US, EU all to be ratified long before he leaves, if he leaves obviously. EU were here this week discussing what was the fourth round with talks with Colombia and Peru. There were high hopes we'd get concluded yesterday, but it looks like we're off to Peru on the 20th of July in Lima to finalise the situation. Uribe also brought up the matter of maybe a change to the tax codes here or some kind of tax reform to help with 2010 expenditure. Coming to that, Zuluaga on Tuesday had his biannual update of where we are. He's now expecting a central government deficit of 4.3% for next year, which is obviously up from where we were expecting. But generally, he seems fairly optimistic. He doesn't worry. The overseas portion of the debt we'll need is pretty much the same as it was. The overall test auctions will be very similar. And bearing in mind we're 86% already organised for this year in terms of test sales, we'll have something like 6 months to offload an extra $4 trillion pesos in test debt. The rest of the speech is optimistic, and really have to understand that if this country is going to expand, then it has to borrow that money to build more infrastructure projects. There's no point paying a US free trade agreement if you don't have the roads and ports to serve it. He did make mention of assets that are for sale. Isagen obviously is worth about $1.5 billion. That will be sold in October. That looks like it'll go towards 2009 costings as opposed to 2010. He also made mention of Ecopetrol and ISA. There's probably another $7.5 billion there if the government really needs it going forward. A very heavy macro week. Retail sales for April were down 7.1%. If you took out the vehicles, which is very interesting, it was up 0.7%. But that's the way it's been. Retail sales boomed during 2007, 2008. They're driven by vehicles, and what goes around comes around. Industrial production dropped 14.5% in April. No real redeeming feature. The worst figure of the year, of the century, the 9 years we've had. Not good. Car production was down 64%. There's been no exports to Venezuela through April. We have now started exporting, so maybe a sliver of hope for the May numbers, but we'll wait to see. New home prices or new building prices are up 3.4% in the first quarter of the year. When you compare it with the rest of the world, to have housing prices going the right direction is fairly encouraging. Public works for the first quarter up 19.4%, but before we all think that highways are being built left, right and centre, that was mainly based on the mining industry, reservoirs and other water-related industries. So, good news, but we wait for those highways that we so badly need. The textile sector have announced they're not sending any more product to Venezuela, which sounded disastrous for Fabricato, but we rang Fabricato and they claim they're no part of this. They've already adjusted things. They have normalised relationship with Venezuela, but again, not good. Beyond that, we put a report out on Aval and Bogota. We reiterated our hold on the pair of them. Credito concluded their sale of Helm Bank in Venezuela. It only took Caracas 8 months to actually authorise that. Not bad by Caracas standards, one understands. Beyond that, not a lot going on. The Llanos pipeline, which Ecopetrol and Rubiales are putting together, 86% complete, will be finished by October, and there'll be a tremendous saving for the pair of them. Beyond that, there isn't a tremendous more news. As I say, it's a long weekend here. It'll be very quiet. I'd imagine next week will be pretty quiet too, as it's another long weekend that follows that. So I bid you a very good afternoon from a very sunny Medellin, and have a good weekend.